the Bitcoin, bounce back is arguably more impressive than the stock market. The stock market didn't do all that much better at a 21.5% drop. So Bitcoin on a relative basis has already round-tripped the all-time highs. Meanwhile, the stock market is still, 5-6% off the all-time highs? 5.5%. So what I'm showing you is what we would call relative strength, because Bitcoin has already retested those highs and even broken out. Stocks are trying to get there, but still working on it. So what do we make of all that? What do we make of a Bitcoin chart moving like this? Well, this is telling you something. This is telling you that there is still large amounts of scrutiny in terms of US denominated stuff right now. What you're looking at right now on your screen is the 20-year Treasury bond ETF. Some of you guys may have noticed that there was some pretty big moves, specifically in the bond market and the stock market yesterday. And the dollar, right? I think the dollar also moved a good bit. A little bit less, but still dollar moved. The reason I bring this up is that we had a Treasury auction yesterday that went pretty poorly. Now, when I say poorly, what I'm talking about is if not a lot of people, or if the aggressiveness to buy national debt from the United States or to lend money essentially to the United States, if the auction is not going well, that's telling you that people are not stepping up to lend money to the US. Now, of course, there were many people there, but the prices that they wanted, the bid was not very strong. So the auction, right, naturally, if no one wants to buy something at an auction, what has to happen? Price of bonds has to go down. And so we're witnessing something pretty fascinating right now. The bond market is continuing to get pummeled today, even following the poor bond auction that occurred yesterday. Now, a poor bond auction is a straight up bullish catalyst for gold. And so we've continued to see the gold market kind of drift higher on this. And I wouldn't be surprised if we do see gold head back up to test some levels of resistance off of this. But part of the reason for that is because, think about it, if people are very, very concerned about US national debt and they're unwilling to buy bonds from the United States, what does that signal to the markets? It signals that there's mistrust, there's considerable uncertainty in the largest money liquidity provider to the entire world, the United States, right? So gold in that environment typically drifts higher. There's some concerns about, whether or not bills will get passed in, the big beautiful bill from Donald Trump and all this stuff with the Republicans and Congress and all that, and all the drama on that front. It's making people concerned. The national debt is a massive kind of, it's like something really, a big eyesore in your backyard. That's pretty much what the national debt is in markets. It's something we all know is there, and eventually we're going to have to figure out what we're going to do about all that. And unfortunately, for many, many years, the solution has been to put it onto the next guy, right? Solution has been to the next politicians will figure it out. The next generation will figure it out. But the problem is that only works as long as everything is solvent and everything is good. But the problem is if you get into an environment in which the people who buy debt from you or buy bonds from you, who are lending you money, say, no more, we're not lending money to you anymore. If that happens, that's a massive bullish catalyst for gold, probably the bullish catalyst for gold. You want to talk about the greatest, like what gets gold? I cannot think of something that gets gold to a $5,000 price tag or $10,000 price tag faster than the US national debt getting defaulted on, something like that. I mean, I don't even know that people comprehend how fast gold could go to 5,000 if that were to occur. And there are crowds of people who have been saying this, and this is where you have to be careful, for literally decades. People have said, Bitcoin, gold is going to rip to the heavens because the national debt is going to explode. And the tricky part with this is that you can say that and be right in the super long term. Maybe that does eventually happen, but what if it's 50 years from now, right? So that's where you have to be careful with that thinking. But it is something to know something about. Don't live under a rock when it comes to national debt. It is a massive, massive problem that has to get addressed. And according to Jerome Powell, it needs to get addressed sooner rather than later.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Got unemployment claims, so let's see if it did anything. These have not been moving the whole market very much. Yeah, you can see 227 compared to 230, so nothing crazy on that front. Market's mostly unchanged. We had the market already kind of moving lower here this morning as the 10 and 20 year yield continued to rise this morning. Bitcoin looking strong. Oil's down today. Dollar index pretty flat here recently, back and forth. Gold dropped, bounced back. Indices across the board had a big tumble yesterday. The bond auction went poorly. That was the concerning thing, is people are like, oh, national debt, don't want to buy US bonds, all that stuff. I'm going to make my chart of the day my worst performing dollar cost averaging currency pair, which is the Canadian dollar against the Swiss franc. So I have a long position from over here, and I believe I have a long position from over here that I've just been sitting in. And they're not, it's not a massive drawdown for me, but it's been a trade where I'm just sitting on the sidelines. Part of the reason for this is on a bigger picture, longer term fundamental view. I have two reasons for this. Number one, trade deals, if they happen, should help the price of oil, which would help the Canadian dollar. And then the other reason is because, and not to get too technical on the fundamental side, if I go to my economic surprise meter, the Canadian dollar has actually been a decently strong outperformer in recent time. We also saw the Canadian inflation report come in higher than anticipated. So I like the Canadian dollar as a bit of a counter trend opportunity here that I'm scaling into with very small size. So I just wanted to make that my chart of the day. I know it's always easier to talk about a winning trade or something that's more exciting, but sometimes chart of the days can be something that's not going so well, or something that you're going through in terms of a drawdown. So I'm in drawdown on some currency crosses that I'm watching on the yen pair and yen pairs that I've been trading, and CAD Swiss. Maybe we can jump ahead. Marco, actually, before we do that, Miko, what's your age?
25.
Okay, so Mika's the youngest. All right. Okay, so Marco, you mentioned it earlier. Bitcoin's breaking out 111,000 and just narrowly missed 112. We might see it by the end of this stream. Marco, what are your thoughts here? Is this something that would you place trades, buy and hold? What are your thoughts on Bitcoin today?
Yeah, I'm actively watching my ledger. So that's nice that the long-term investments are going up. But something that is not really that great is I never got a pullback to this area. So I was looking for like a short-term buy setup. We never got that. Now my area has moved up a bit. I'm looking at this support level. So I want to get in. I want to see a pullback. but this looks very impulsive. We just broke the all-time high. Bitcoin is known to really break out with massive force and never give you a pullback. So the game plan is wait for the pullback. If we go to this area and I get a nice buy setup, I'll be interested in that. Stop loss will probably go a little bit below this support level. If we go up even more, well, then I'll need to find another support area, possibly a bit higher, and aim for the same thing. But I don't really see this pulling back a lot. And if it does pull back a lot, I'm a little bit afraid that we're just gonna massively sell off, with how Bitcoin goes. But I have my levels set, so looking for buy setups. I'm just gonna follow the plan.
Fair enough. Yeah, no, I like that analysis quite a bit. A pullback to that 102 level that you've got marked up, I think is probably where I would need to see price pull back to as well to establish any sort of long position. But yeah, I mean, you hit on the head earlier about the risk on sentiment that seems to be kind of formulating. I know another chart that we like to periodically, I know we do a lot of like sentiment, relative strength, things like that on our calls here together. Bitcoin to gold ratio still looks really, really good, right? Bitcoin outperforming gold, showing the directional bias here, still seems to be a little bit more poised towards risk on, clearly making a strong push here today. Mika, what are your thoughts on Bitcoin, risk assets, just in general about what we're seeing?
Yeah, so it's looking good so far. I think the key thing is just seeing more momentum with Bitcoin, because we are trading at all-time highs, so things are looking very bullish. But if we slow down, become a bit corrective, that's a bit of a red flag for Bitcoin, and that could invite potentially a bit of a sell-off. So I want to see price kind of give us similar breakouts as we've seen with the past, like we had over there. Here we didn't really see much. Price consolidated and then price had the breakout, especially the last big bull run. I would say pullbacks have become a bit more frequent now as well, which I don't know, might be a sign of us slowing down as a whole, not seeing Bitcoin as exponential as it's been in the past. But in terms of the price action, I would just be focused on longs here. Trajectory, difficult to say how far we can go, but I'm not seeing any red flags just yet, so my impression would be more upside. So from a trading standpoint, I think pullbacks make the most sense. We had a lovely consolidation here. Unfortunately, no retest. Another one over here, which potentially might provide a retest as well. It just depends what type of price action we see with Bitcoin. If momentum's just going to keep pushing, it might only be a situation where you have to scale right down to find an entry. Maybe something like this could form, but in terms of direction and my bias, it's still very bullish.
Yeah, I mean, the directional bias here, or at least in terms of price action, is just clearly up. I mean, it's just been so impressively strong this year. I think part of the reason just might be the alternative to U.S. Investment. I thought about this morning when I was driving in to work. I thought about, if you have a situation in the next coming years where people want to offload a little bit from US denominated stuff, US stocks, US bonds, US everything, where would all that money go? If you had, I mean, that is a ton of money, and it's global money, right? It's like foreign investors make up a huge component to investment in the United States and Silicon Valley and all the Mag 7s. Like, it's a huge portion of it is money from outside the United States invested in it. And I think it's so interesting because if you really start to think about, even on a local level, if you said, I no longer want to be as heavy, you don't even necessarily have to sell all your US stuff. But let's just say you're like, I just don't want to be as heavy exposed to the US. If that theme takes place over the next few years, where does that money go? It goes to everything except US stuff. That includes Bitcoin, gold, other currencies, other stock markets, altcoins. Like in some capacity, everything else gets a little bit of a bid if you do kind of lose that US superior investment class status stuff. So I just thought that was an interesting thought. I think that's part of the reason why Bitcoin has already taken back those highs. despite, US stocks bouncing back nicely, I mean, really nicely, they're still off their all-time highs. And Bitcoin had a similar comparable drawdown to the NASDAQ and is yet past those all-time highs. It's really remarkably impressive how good Bitcoin is doing. And I think that's something for us to just keep an eye on. This is many years. You can dispute if you like Bitcoin or not, but you can't dispute that it has massively outperformed pretty much everything else in the last decade and a half, whatever it's been. So just something to think about. Let's talk about metals here for just a second. Marco, what are your thoughts on gold, silver? I know a little bit of a while ago, we were both kind of bullish on gold at the same time. I've since kind of gone back into neutral camp. What about yourself? What do you think about gold?
Yeah, so for gold, I don't have it on my active watch list. The reason is I do believe we are still risk on. And if I'm looking for buy setups on things such as Bitcoin, the NASDAQ, and let's say the German stock market, I don't think gold is going to be the greatest play to go long at the same time. So currently I'm risk on. If something happens, some sort of an issue, new tariffs, new problems with tariffs, then gold could be flying higher. I know it's catching a bid right here in the last few days, so it's looking pretty healthy. I just cannot justify going long right here because of the overall macroeconomic situation. Mm-hmm. So I'm waiting for a catalyst. Until I get a catalyst, I'll just be patient, sit on my hands. That's the general plan. Technically, it looks okay. I'm not gonna lie. Technically, it looks good, but I don't want to own it right now.
Yeah, that's exactly how I feel too. I feel like the technicals long-term uptrend looks very, very intact. I'm curious what you think, Miko. You're the what am I thinking? Technical purist of the group here. No, nothing but technicals, which I respect. I love it because it's a lot the charts can tell you. And before you even answer, one thing to think about too is a lot of the stuff that some fundamental analysts might gather can also be determined from the technicals. I'll give you a quick example. Bitcoin's outperformance to the NASDAQ, while that is not necessarily saying fundamentally why, you're getting the same kind of idea by saying relative strength is like a mix. It's a combination of technicals and fundamentals, because you have to ask, there is a reason for that outperformance, but maybe a technical purist doesn't really need to know or care about the reason. So I think that there's many seats at the table, many ways to approach the market. So on gold, right, where we had this dominant upward one direction move, we've now gone into a bit of consolidation. You've got your 4-hour chart pulled up. What do you think about how it's been performing here recently?
So yeah, I'm still as a whole very bullish on gold. Trend, no signs of necessarily reversal. Yes, things have slowed down over the past few days, and I think it just probably might be a healthy part of gold's trend if it is going to continue. That is, I have kind of drawn up this, if I drop to the 4-hour chart, I have drawn up this channel here, which has made things a little bit interesting, potentially a big bull flag at play. So that's our recent impulse, there's our first correction, second one, and if we are going to see some follow through, we should be looking at potentially breaking the high of that channel. So this is where things get interesting, because if gold is going to become flat and potentially retrace further, then this is kind of the area which I expect us to potentially put another lower high in and start making our way back to the lows. We did a good job at respecting this area here and the low of the channel a couple weeks back, I think, or last week. Nice push to the upside, but it hasn't really set the market alight. It's not like we've seen momentum like we've seen before. It is a little bit slower, so I do worry at this top here. But for me, from a technical standpoint, that's make or break, because if I do see a powerful break above that, well, I would be pretty bullish and expecting gold to make its way back to highs. If we stay slow corrective, a lower high here has a good chance of forming, and we might see a swing down, which again doesn't necessarily mean gold is bearish. It might just be another test of support before we do push through. In terms of really going bearish for gold, I really want to see momentum through this level, maybe even start to attack some of these lows. That's when I will truly be bearish on gold from a technical standpoint. But I like the buys down here. But yeah, more importantly, just see what price does at this 33.25 level. Yeah, but if we do see a break, I don't see any reason why we can't push back to highs.
Very nice. Yeah, no, it's consolidation to say the least. Whether you're looking at the 4-hour chart or lower, it's been kind of choppy here recently, but we'll see if it can get a little bit more of a decisive break. I would agree, if you start to see a break of those lows or of those highs, likely it's accompanied with a catalyst, right? Like most likely there's something that would get gold to make a significant move beyond the all-time highs, or start to break that 3140 level, that range, that or 3150 level that you've got marked on your chart. So yeah, we'll see if gold starts to make a decision one way or the other in coming days. While we're on the subject of gold, let's talk about the dollar as well, which of course plays a big role. Miko, you've got the chart already. What about DXY? What do you think about that one?
So DXY, I was looking for a bit of a bounce this week for the dollar. Didn't really see that happen at all, to be honest. I was looking to see if price can bounce here, potentially another higher low and climb high, because I do think there is still more downside for USD longer term. My plan, since we've had this big drop and cleared the lows, has been basically a pullback of that bearish leg and then more downside. But potentially maybe the bears are stronger than I thought, and potentially looking to continue price sooner. And if that's the case, well, I would expect us to push back into this low around 98. So things looking pretty bearish, I have to say, for the dollar. The fact that we cracked that support pretty easily this week says a lot to me, and my expectation for the next few days would be something like this, potentially continuing with those lower highs. I did have a bit of a bullish bias come into the week, but I'm not really seeing much signs of that continuing. So with this break of structure, if we can come back, retest that hold as resistance, I don't see why we can't continue to sell off and potentially just continue that bearish pressure we've seen all year, and that could take us back to low. So I would be pretty bearish now on the dollar.
And Mika, do you like the pound dollar as much as I do to the upside?
If it does break resistance, yeah.
Yeah, it's sitting right there.
Yeah.
It's like right there, and the strength of that chart is just remarkable, really.
Very, very bullish. Very, very bullish. If it can do its job through that high, then we could look at very nice buys after that.
Yep. I think we see the same thing on that one. Marco, what about yourself? Any dollar crosses, DXY, whatever you'd like to look at? What has your attention on the US dollar side of things?
Sure. But first, I also want to mention silver, which I do have an alert set here on the highs, and I wouldn't mind getting in on buy setups, even if we don't have like a risk of catalyst. So if we do break out from these highs and then print a buy entry, I'll be pretty happy to get in, because I do think silver has a lot of catching up to do to gold. So this would be more of a technical play, but I do see a lot of potential if we can just break out from this level on silver. So now for the DXY, let me go to the DXY. Yeah, I do think we are still bearish. I think we're printing a lot of selling pressure. We had these massive two legs on the daily chart, and now we are sort of continuing with that. When I take a look at, let's say, the euro dollar and the pound dollar, they're looking still very bullish on the daily chart, respecting this 20 EMA. So I totally agree with Miko. I think this is looking pretty bearish. We are now also at a key level of support. So if we do break lower from this, then we could get a massive slide lower as well, like this. So bearish on the DXY.
Fair enough. And if you had to trade it against a currency, what are you thinking? Euro dollar, pound dollar, Aussie dollar? What looks interesting?
Because of the edge finder, it would have to be the pound dollar, because the pound is so strong as a currency right now. We're getting a really bullish reading for the pound, so it would definitely be this. But as you guys mentioned, if we can just break out from this level of resistance, get a nice bullish impulse, I think that's a really good play for buy setups. So pound dollar, pretty much same as you guys. I think we're on the same page on that.
Yeah, and just to throw in just a dash of spice or fundamentals, check this out. On the UK economic heat map, we've got something pretty fascinating happening here. Rarely do you get a impact score that is so high in favor of a currency. And that's why I think there's a good chance, never a certainty, but a good chance that we do break those highs and that we keep going. Because what we see right now is almost all of our metrics on the Edge Finder tracking the UK economy have been bullish for the currency. So, for example, we just had CPI come out for the UK. It came in higher than expected. That is hawkish because it basically pressures the central bank to not cut interest rates. They're trying to cut rates, but this keeps them from cutting rates because if inflation's already high, they don't want to cut rates into that. So that's bullish for the currency. Retail sales beat expectations. They were expected to be negative and the consumer came out and spent money. Could that be because of tariffs? Maybe. That's the criticism there. PMIs, however, right, came in better than expected. GDP growth was positive when it was expected to be 0. So a lot of these forces here that we pay attention to close on this channel are confirming the technicals, right? The technicals look great. The fundamentals also look great. Unemployment rate 4.5%. That's not it's not too high at all. PPI also came in. This is a little bit delayed since it's going back from February, but also higher than expected. So we're just getting a whole lot of listed reasons for why the UK economy is relative to expectations, which is what this impact chart shows us, beating expectations, which again is strong for the currency. So yeah, when I look at the pound dollar, this has got to be my chart of the day in terms of US dollar crosses. I'm very interested if you get this kind of move in looking for long side continuations, and I would not be surprised whatsoever if when we pull out the weekly chart, if we are in the process of heading back towards maybe that July-May high that we saw in the pound dollar exchange rate, which is all the way up to like 1.4, which again may take some time to get there, but I think technicals and fundamentals both kind of line up here. Just going to be dependent on what we all had marked up on our chart, that major level of resistance going back from September of last year. So really interesting stuff.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.